Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 30th of September. September can be a traditionally difficult time for stocks, but that's certainly not the way it's turned out. And for a change, it's China which is at the top of an investor's agenda. It had seemed for some months now that the ailing Chinese economy had seen the authorities sleeping at the wheel, but they've come back over the last week with a whole raft of stimulus measures which really has turbocharged not only Chinese markets, but it's fluttered out into other areas such as commodities where Chinese demand could be on the up, and indeed in turn the likes of the FTSE 100 where you've got a whole host of mining stocks as well as China exposed stocks such as Prudential and Standard Chartered. So it's China that's been the star of the show this week. That's not to say that the US has been quiet. There's been a lot of benign economic data which has seen both the S&P 500 and the Dow Jones touch record highs on a few occasions during the week. And obviously next week we'll be looking ahead to the possibly most important economic release of the month, which is the non-farm payrolls. So in the meantime, and in the year to date, the Dow Jones is currently up by 11.9%, S&P 500 is up by 20.4%, the Nasdaq by 21.2%, and the FTSE 100 is up by 7.4%. In terms of the FTSE 100 and UK generally next week, there's a couple of companies worth looking out for. There's also one FTSE 250 company. First of these is Tesco, reporting its half-year numbers. Shares are up some 35% over the last year, had a particularly good run as they continue their juggernaut status. This is obviously worth bearing in mind in terms of market share. The second and third competitors, Sainsbury's and Asda, Tesco's market share is more than those two combined. So that's how far ahead Tesco have. They've been concentrating heavily on price match with some of the lower priced discount supermarkets. They've got their own Finest range. They've got a strong online presence. Also, we may see that in terms of shareholder returns, there could be, being at the half-year stage, some sort of announcement, possibly on a further share buyback. In any event, guidance will be something to look out for. Also, half-year numbers from JD Sports. These shares are up by about 8% over the last year. They've started to expand quite aggressively, particularly in the US. So any news of acquisitions will be something investors will be looking out for. Something that's possibly held the share back slightly is their tie-up with the likes of Nike and Adidas, who earlier in the year had said that they were seeing some weakness in consumer spending, which obviously fed through to JD Sports. Nonetheless, the overall consumer spending picture does seem to be appearing, so the up-to-date trading is something to look out for. And finally, in the FTSE 250, full-year numbers from JD Wetherspoon. Shares up about 8.5% over the last year. Obviously, it knows its market. It's continuing to trim its store estate where necessary, at the same time expanding into other new areas. There's quite a big Wetherspoons outlet due to open before too long at the likes of Waterloo Station in London, for example. But again, this is a company which deals on fine margins. So have a look at the operating margin as well as any operating profit, of course. See whether there's been any change in the mix between bar sales and food, and also at the same time how the company is getting on with dealing with some of the fairly high costs that are going on at the moment. They also predicted a year-end net debt figure of £670 million, so it'll be interesting to see whether that is also in line. Thank you for watching. Have a great week.